Hey, what's going on, guys? This is another response video to a question that was sent in on the Discord. And their question was, they were asking whether I use EMAs in my trading strategy, and I don't, and I'll explain that when we get into it. And then their second question was, how would I implement EMAs in my trading strategy? How would I utilize them to make money? So we're going to be talking about that, but first we're going to talk about the difference between SMAs and EMAs, or sometimes SMAs are just listed as MA because it is just the moving average. Now, what is the difference between EMA and an SMA? Well, first of all, there's an E, which means exponential, so exponential moving average. And then there's the simple moving average. I like to use the simple moving average. What is the difference between the two? A simple moving average, say we're looking at a period of 10 days. So you have to modify your indicator and you put it in the period bracket, basically telling the formula what to calculate and what numbers to crunch. And if we're utilizing it in a 10-day period, it's going to take the last 10 days closing and opening price, add them together, the last 10 days, and then divide it by 10, and it's going to give you the average of that movement within those 10 days. So each day is equal in the formula is equal to each other. Now, an exponential moving average gives more weight to the most recent period. So the most recent period has more weight in the formula than the 10 than the last period, the very last one. So say we're looking at a 10-day period, so there's 10 days, and in the formula for an exponential moving average and how it draws it up, the most recent day has more weight in the formula than the very last day in the formula. What does that mean for the indicator? Essentially, that means that the EMA is going to give you more indications of a trend change than the simple moving average is going to give you one. So the EMA is going to give you an indication of a trend change first before the simple moving average. What does that mean for you as a trader? Basically, if you want to get more indications of when uh, using this formula, it indicates that there is a trend change. You want those trend change indications to come sooner than later, rather than later, basically confirming it for 10 periods before you take action versus, okay, the last 3 days have been in an uptrend. It's most likely changed. With the exponential moving average, it's going to give you that change in the indicator quicker than the simple moving average. Now, why do I not use EMAs? I don't like to use EMAs because I don't like indicators that give me signals too frequently. I like to give it some time, let it breathe, and really be certain that price is moving in whatever direction that the indicator is telling me. And that's why I like simple moving averages. Some people like EMAs, some people like simple moving averages. The problem with EMAs is it gives you these indicators way too often. So sometimes it'll switch up, and I don't like that. Anyways, so I'm going to give you an example, a live example of what that looks like on the chart and how to utilize it. Let's get my big head out of here. We're looking at Bitcoin here, and we're going to throw on some indicators. I've already got them loaded up. I've already got their settings set to 10-day period moving averages and a 10-day period exponential moving average. So let's look at the moving average first, the simple moving average first. We have it in red, and it curves in the direction that the market is trending in. So the moment it starts to curve downward, that's an indication that the market is bearish and price should be moving down. Now, when the indicator starts to curve upwards, that's an indication that the trend should be moving in a bullish direction. Now, when the indicator, say, is not moving in either direction, it's kind of flat like it is here, that means there is no trend. There is no up or down trend. It's in a sideways market. Now, Let's turn off the moving average, simple moving average, and let's turn on the EMA. Now you can see very similar to the simple moving average, but more we get more jagged indications of price change. So here we still have, it's kind of flatlined here, but then immediately here we get that corner of just a move indicating that, hey, it is no longer bullish. We are now bearish. Because like I said, in the math formula for an EMA, it takes the period that you're in currently, it has more weight than the period it was in previously. So if it's taking the last 10 days of these periods, it's going to take this one and it's going to weigh it more than the one at the end. So the indicator is going to give you an indication faster, like I explained previously. Hopefully you guys are still following. Anyways, so let's now put, and you can see it here too, the indicator also changed immediately. It's like, all right, we're going down. Nope, trend changed. Now we're going up. Let's compare the two overlapping each other. So the EMA is blue and the simple moving average is red. Now you can see the simple moving average doesn't change as abruptly as the EMA changes. So you can see here, the EMA changed very abruptly because the most current period was now showing a bullish move. Now, whereas the simple moving average had a gradual curve before indicating that the trend has now changed. So simple moving average indicated that the trend change happened here versus the EMA gave you a trend change. I'd say this was a slight trend change. I mean, this is definitely a pretty big trend change, but I think the real one occurred really right here. So you got that trend change 4 days before you would have gotten it on the simple moving average. Now, utilizing these two, how would you implement it in your trading strategy? Basically, what you would do is you would take whatever strategy that you're implementing and say that you're looking at taking a long position at one of these points. So let's go ahead and get rid of these boxes here. And let's look at this area right here. So say you were trading and you saw this in this area here using your strategy was telling you to go for a short position and you're thinking of taking that short position. If you're implementing either the simple moving average or the EMA, they both work the same. You would look and see whether price is above the simple moving average or below a simple moving average or EMA, or if it's below the simple moving average or EMA. If you're looking to take a short, you would want the simple moving average or the EMA to be above. So then you wouldn't take that trade. If you were looking for a short here and you were implementing either the EMA or the SMA, you wouldn't take this short because you would then look at the simple moving average, which is here, or the EMA, and you'd be like, oh, well, price is sitting above it. And if it's sitting above the simple moving average or the EMA, if it's sitting above them, that's indicating you should be looking for longs. Now, say your trading strategy found a long position to take in this area here, and you were implementing the EMA or SMA. You would then check your EMA and SMA, and you would see that, hey, I'm looking to take a long position. You check the SMA or EMA, and you'd see, oh, okay, price is above the SMA or EMA. So that's a good indication that we're good to go long. And vice versa. Say you were looking for a trade here and you saw, oh, there's a potential to take a long position here using your strategy, but then you check your EMA or SMA and you see, oh, price is currently below my SMA or EMA, so I shouldn't be taking any long positions. I should, in fact, be waiting for my strategy to indicate a short position and then take that, and you're more likely to succeed in your trade. Now, I hope that helped you and answered all your questions. If you have any more questions about how to utilize the EMA or SMA, please shoot them to me in the Discord in the trading help category, and I will get back to you with a video. Keep on trading, and yeah, I I wish you the best of luck and the most success. Oh